Right. Ah, there we go. Ah, there we go. Okay, so stocks up. Ah, there we go. Okay, so stocks up. Okay, so we can target this first. How do we share this? I don't actually know. Okay, how the fuck do I? Here we go. Okay. Gosh, laggy. What a fail, man. 10 o'clock at 4:40, so 10, 4:33. There we go. Alright, can you hear me? Let's get this thing going. A little bit of a delay, but it is what it is. Okay, cool. So, talking about AMRS, that was the stock that we were dealing with today that we both lost. We'll go over here just a little bit later. We'll take a look at your trades. We're just going to look at my trades quick, just because I can see those and I have all the info right here, and I can show you what I was going through, like what was going on in my head when I made these trades, and why I exited the positions when I did. And although I don't think they were necessarily bad trades, they were just maybe not executed right. And that's partially on me. Yeah, just you can talk in Discord. It's just probably easier actually. Discord's a great chat for this. Honestly, I love Discord. I think it's phenomenal. So, any questions or anything you hear me talking about that you have questions on when I go over this chart here, or if you need me to be louder, zoom in, etc., let me know. So this is my trades for the day. As you can see, there's a ton of them. It looks like a lot more than there is actually. It's because I market sold on a lot of them because they were fast positions where I didn't want to be in them absolutely any longer than I needed to be, because you're just taking more losses than is necessary, and you want to preserve your capital at every turn. So as you can see, we got all the market sells here, limit buys. These are the fills, right? So I buy in 3,000 share increments. So if it doesn't fill all 3,000 shares at once, it'll go until it hits that mark of 3,000. And that's why you're seeing these 454, 454, 454. They're all the same price, but they're filling according to who's selling at that time. And this is something that you won't really see in Thinkorswim's paper trading platform, because it's going to fill you all at once. There's almost never an instance where it's coming up and saying, hey, there's not enough sellers. It'll almost always give you a fill on the paper version. On the real version, the fills are a little bit different. So that's something to keep in mind. As you can see, me trying to sell 3,000 shares, it took 10 orders to fill 3,000 share sell. I mean, granted, they're all almost exactly the same price, or 0.005 of a penny off, half of a penny off, but that does kind of add up actually. But when you're market selling, you got to take what you can get, and I didn't want to be in those positions absolutely any longer than necessary. So my first sell here, I did get a full fill at 3,000. That's this 3,000 buy here at 10 o'clock for 440, and a sell at 10:01 exactly 1 minute later for 433, which sucks, but it is what it is. And so let's go to the chart here, and we'll take a look at the 10 o'clock time frame so we can see what I was thinking when I bought this share at that time and why I did it. So the purple line that I have here is the VWAP level. That's my, I don't know, it's just the color I chose when I first started with this. So kind of going over that. As we can see right here, 10 o'clock, right? This is the 10 o'clock here, and it was just hitting that VWAP level, and there's this resistance level right here. It broke through it. I thought it had the power because it was making higher lows, right? So it lowered right here at 411. That's actually where I wanted to be filled. Unfortunately, I was looking at another stock when this level hit that I wanted. It went through, and it didn't come down as far, right? So it didn't come back to 411. So I thought there was potential that it could maybe bust the VWAP again and go up higher than this 450, 460 here. And that's why I was intrigued by it in that moment. Now, right here in this 9:59, 10 o'clock area, and then 10:01 is when I sold, because it just didn't seem like it had it anymore to me. It went up on this resistance level right here back from 9:37 way early, right after market open, and right here it didn't break it, right? And this next candle started to drop off, and it went below this one here. I didn't like that. I sold it, and as you can see, another, if I'd held it another second or two, or another minute or two, instead of losing, 7 cents a share, I would have lost, gosh, I don't even want to think about it, 20, 30 cents right there. So 40 to 20 some cents, 23, 24 cents a share instead of 7. And like I said, risk management and capital preservation, huge. I think I made the right sell there, doing it there. There's an argument to be made that you could have held it still, but I just didn't feel like it. Between the volume, as you can see right here, the volume's getting kind of light, and it's just not quite like what I'd want it to be. Come on, move with me. Like right here, you see the volume on this candle, how it's just, they're so low. There's such low volume. I didn't feel like it had the volume pressure it needed to break the VWAP. And as we can see, it definitely hit the VWAP, came down a little bit, and then it, sold off here, which I didn't like, obviously. And then it came back down to the 411 mark right here, which is where I actually wanted to get back in again. And wasn't able to do that, which sucks, but what is that doing? Clear drawing set, there we go, yes. Okay, and as we can see, it hit the 411 mark again, which held up over here. And as you were talking to me about earlier in the day, we could see from our flex grid all the way back here. Look at these levels. Beautiful levels, you know. These are good support levels from back here. This is a 1 month, 1 day chart that I have here. As we can see, the bottom right there, that 4, it came down, really hit it beautifully, and it held that level right around, I think it was 411. Yeah, well, 406. You know, in that area, we can see that there's a good amount of support here from these days where it held. So that's a good indicator. Hey, you know, this might be a good time to play it. Now, when it hit this again here, as we can see, it had another move. It wasn't a great move, but I mean, you know, 411 to 443, you know, you're talking 32 cents. That's quite a bit of profit when you're trading, you know, massive share volumes like I am. You know, 3,000 shares, every penny is $30, you know, so 30, you know, you're talking a good move as far as profitability terms. And, you know, that would have been a great play. And as you can see, it came up, hit the VWAP, and it broke actually these levels from a little bit earlier, which is cool. Right here, this double, sort of a double top, I guess. The wick here, the little wick kind of fucks with it, but it's still breaking it. As you can see, it went sideways, hits, and it goes up right here because it's holding those levels, making what's called higher lows, right? So it hits this the support level, as you can see on the blue line here. We can see that all the way across. It hits that. That becomes a double bottom, which means there's a lot of pressure there on the support, which means likely it's not going to drop below there unless there's good volume to break it, or the stock starts to sell off real fast or just flushes down. I mean, no different than this candle here. It's just, it flushes down, but it hits that level, right? It doesn't actually break that support, and it goes sideways, hits the support, bounces off the support up to the VWAP, holds the VWAP, breaks the VWAP. You know, these are plays that, you know, you're trying to predict in your head before they happen, because, you know, hindsight's 2020. We're looking at it after it's happened, so it's easy to say, you know, this is this. But look at this. Look at this volume coming in right here. As soon as it broke that VWAP, look at that volume on that candle right there. You know, you're talking 500,000 in volume on one candle. People just jumped in on it, and that's something that when you're able to see and predict, you know, you see this trend reversal here. It starts to break that VWAP level, and then people just flood it. That's when, honestly, jumping in would have been great, because especially when it breaks this resistance level right here, it breaks it, more volume comes in. You know, you're talking 2 million in volume in 4 minutes, and it breaks that level, flushes up another, you know, 20 some odd cents. That if you're really paying attention to the stock, this is something you could potentially predict happening. And, you know, it's hindsight's 2020, like I said, but it's something that when you see that volume coming in, something's happening, the stock's moving, something's going on, and you want to be a part of it, right? Fortunately, I missed it, of course, which, you know, sucks. And I bought back in at 10.52, so let's take a look at 10.52. Sold from 10.52. I sold at 10.57, so I held it for just over 5 minutes, apparently. I felt like it was quicker than that when I was doing it, but... So I bought at 4.54. So let's go to 10.52. 10.52, what was in my head here? Okay, so 10.52, we're talking right here. And, sorry, just a second. So we're going over 10.52. It hits this level, right? So as we can see, the low of 411, right? It hits this double bottom right here. Beautiful 411, double bottom, right? Then it comes up here and it goes up, comes back down, right? That's a higher low. So this is the low. This is a higher low. This is another higher low, right? It comes down. It starts to switch gears here. That's 3 higher lows. It's making nice higher lows. I had this move up. This beautiful move, it busted the resistance here. At 10.52, it starts to reverse here, and we see it's, unfortunately, right when I buy it, 4.54, it starts to drop down, and it reversed right here. And if I had sold right here, I actually would have made, I think, 120 some odd dollars back of my losses from my previous play. And unfortunately, it basically hit this previous resistance level right there. You can see how it goes right across and hits that. It tried to break it again, and it just flushed down, and that's when I sold. I realized, okay, it doesn't have what it needs to break that resistance level, in that moment. That doesn't mean it's not going to do it the rest of the day, but in that moment it didn't. I think I made the right call. 454, I got filled at 445, like right here. It's 10:57. Yep, so right here, 445, and just a couple minutes later, it dropped down to 430, and then even down lower to 430. From 436 to 430. So I saved myself, 10 cents a share, and if I'd held it for just another few minutes, 20 cents a share. Another capital preservation. You got to make those split-second decisions. They're hard to make because you want to believe that your theory is going to hold up every time, and you always want to be right. But unfortunately, stocks don't work like that. This is something that's difficult to understand and to learn, and that's okay. There's nothing wrong with that. That's where capital preservation and risk management come in. They're huge. You got to take that loss and understand, hey, my theory is not holding up. I want out now. It's capital preservation. I lost 9 cents. I could have lost 30 on both of those trades. The one before, I think I lost even less. It was like 7 cents or something, which we went over, a few minutes ago. But those exits, they're difficult choices to make because, you're taking a loss on a trade you don't want to take a loss on. And, in AMRS's case, if we look at the whole day, it's like, well, why didn't you just hold? It's easy to say in hindsight, oh, I should have just held all day, it's got the news. It had good news in the morning, admittedly, but I didn't like the stock. The way it came out of the gates, it just seems so unsure of itself, which we can see here by, just look at this massive unsurety. However, playing the whole day, look at this. Low, lower. Like the lows just get higher and higher and higher. It has a dip there, whatever. Comes up, lower, lower, lower. It comes back down, looks at that level. I mean, I wasn't playing. I don't usually play past 11 o'clock. And man, if you're a swing trader, maybe you would have known to, hey, believe in this stock. But that's not how I trade. I'm a big fan of risk management and controlling it in those moments. That's just how I play, and that's what works for me. Usually, I lost $487 today, which sucks. Nobody likes losing. I don't like losing, but sometimes you just do. If I'd played a little bit longer, you can say anything, if you played it longer, maybe you got more money, whatever, I don't know. So those were my trades today, and although they weren't winning trades, I don't think they were necessarily bad trades. I didn't get 2 entries at 411 because I was watching other stocks here, like WorkX here, look at this thing, just, how do you, I don't know. This was not even on my watch list, so I don't know. Somebody mentioned it around 6, and as we can see, it went from 6 all the way up to 9.95, and then flushed down, comes right back up, high of 11.39. Absolutely unreal. If you had the balls to play it after this halt here at 6, kudos to you, man. But WorkX didn't, if I remember, it didn't have any. Yeah, there's no news, not a single bit of news. It just went apeshit. Which is great for anybody that played it, but those are risky to me, right? So that's very risky. Now, admittedly, this is a really low float stock, 920,000. As we can see, there was 2 million in volume on the day. At this time, though, there was 17,000 in volume. I remember right here at $6, 17,000 in volume. Absolutely absurd. Me playing 3,000 share size, that's, a fifth of the shares for the entire day. I don't feel comfortable playing that because guess what? If it flushes down after that halt, now admittedly most times after a bull halt, which is a bullish halt, the second time it usually will keep going up. The third time gets risky and it usually goes down. This one, I think it went up 3 times, and the third one, as you can see, it flushed down right here. If you had the balls to play that, you could have made absolutely absurd amounts of money. When you're trading 30 grand a trade, $6, you're talking, for me, 3,000 shares, you're talking 18 grand. You could have doubled it, one day. That's easy money, right? But you could have just as easily lost that on such low volume. I'm not a big proponent of playing low volume stocks under you know, 500,000 is risky to me because I worry about being filled. I've been screwed in the beginning on that, and it does worry me.
She just wants to play.
Yeah. Okay, boom, back to it. Okay, so we were talking about WorkX, I guess however you want to, WORX was one of the plays. I forget who called it out in the Alice chat. That's another thing to keep in mind. All these stocks that are going are not necessarily ones you're going to see on the scanners, which I'm still not sure if you use the scanners, but I'll pull it up here just to kind of show you in Discord what it looks like. So this is the trading floors where everybody talks. Scanner link, bullish scanner. It's going to pull up something like this. And this is the scanner which Static provides to us via a video conference software for free. I mean, this thing costs, I think, $2,800 a year. So, you know, you're saving yourself a lot of money, and this thing is beautifully helpful. This is pretty much the one that you're mostly going to be looking at, and this thing will be flying during the day. You'll see all these stocks going up and down. You'll see their volumes, their flow, their short floats, prices, you know, things. This is just something to keep on watch. I keep it on my third computer monitor or my second one, depending on the day and how I'm playing with it. And it just kind of gives you an idea of what stocks are on the move that day. It really gives you a heads up. You know, so if you see a bunch of people jumping on a stock like Works, like WRX, because it's going crazy, right? You're going to see this flooding. It's going to be all the symbols going to say WRX, WRX, and it's going to be flooding down like a rainfall. And you're like, okay, something's going on here. There's a lot of volume coming in. Let me jump in on it and see if maybe you can catch something. And occasionally you do, occasionally you don't. But the pre-market scanners are the ones where you kind of set up what you're going to do as soon as market opens. That's just a little heads up on that in case you didn't know too much on it. And and then we got the trading floor. People on here, there's so many people on here, you know, that are good traders. They see these things. They're you know, you're talking 5,000 pairs of eyes instead of just yours. So 5,000 people looking at these stocks and seeing all these things moving are going to be so helpful. Now, your trading strategy and theirs are going to be two different things. That's just the way it is. Nobody trades quite the same. Whereas a lot of people in this chat do like to trade extremely low volume stocks. I'm not one of them. I trade more solid volume because I hate not being filled. It's a terrible feeling when you don't get filled on something. And you're basically caught holding a bag and you lose, and there's nothing you can do about it because nobody's buying it. Just a second. I gotta take a phone call from my wife. Hello? Okay. Okay. Back real quick. So yeah, definitely use the Atlas chat to take these. Now what I do is I'll go into the trading floor here and I'll see these people, you know, people are talking right here, like here, what's BLIN, you know, what's TRVN, you know, all these things going around, and they're just the good things to know. Like, it doesn't mean that what they're talking about is 100% going. It doesn't mean that what they're talking about is something you're even interested in, but it is something worth looking at. It's so easy to simply pull it up and just take a look at it, because, you know, in the case of WRX, I would have never seen this. I didn't know it was going because I didn't see it on the scanners because I wasn't paying enough attention. But somebody in the chat room did. Somebody saw it and they knew it was going. They called it out at, I think, $6, and as you can see, you could have made tons of money on it. Beautiful play if, like I said, if you were ballsy enough to play it. I wish I had been. It would have been a massive, massive win. You know, but that's just the way it goes. Now, there were some other stocks here. Most of the stocks traded kind of crappy today. I didn't really like most of them as far as the opening. And like I said, I only trade till 11 or so before consolidation period. Things like to consolidate after 10:30, 11. And as you can see from like right here, this stock's just kind of, you know, consolidating. And then after lunch, people get back from work and they just people get back in. It's just how it goes. It's kind of funny how you notice these things after a while, but it's just the way they go. So let's go ahead and take a look here at some of the stuff you sent, some of your earlier trades today, and let's go ahead. Take a look here. Okay. Wow, look at that. Okay. Did you send your, like, when you got in and out? I don't remember, to be honest. I'm trying to look for it in the chat, but I'm not overly see it. Oh, wait, it might be this one. Okay, yeah. Okay, so let's go ahead and pull this up here, and so we can see this is the chart that you sent me of your two trades today. They were paper trades. Great. I'm a big proponent of paper trading. I think it's amazing. It gives you a lot of training and skills that you're not going to get. Don't get me wrong, live trading is obviously going to be the driving factor. It's going to be the real, you know, no guts, no glory kind of thing, where make it or break it. But paper trading is going to give you that leg up. It's going to teach you basics and stuff like that. The fills aren't going to be quite the same. It is what it is. But, you know, if you're doing really bad live trading, definitely paper trade. Big fan, big proponent of it. Because I was one of those people who did not paper trade in the beginning and got wrecked for a long time. As we can see, your buy here at 850, so 950 for me. So let's go ahead and pull this up on the actual charts and take a look. Charts, AMRS. Gosh, look at that. 53 million in volume, 73 million shares. That means just a massive amount. What is that, like 70 some percent of the entire company's shares were traded today? That's, you know, crazy, crazy volume. You know, I don't even think the SPY was that much today. Oh, it was 79 million. Fair enough. But still, that's crazy, you know, a crazy amount of shares. And I don't actually usually trade stocks over around 20 million shares in float. The lower the float, the higher likelihood that they have a chance to run, which this one did eventually run. I mean, but it did have 53 million in volume, so that's, you know, phenomenal. And it had a 55,000% above its daily average. Crazy. So yeah, 850, so 950 for me. So let's see here, 950. Now, your trade here, I don't think actually, if I remember right, was a bad one. I think your exit was bad, if I remember right, because we were talking about that just a little bit. And obviously, any questions you got, whatever, just post them on Discord, and I'll try and talk about it a little bit about these trades. So yeah, 850. So you went in at 8. Damn it! This thing keeps moving. Yeah, I set the stop like 5 cents. Now you set an auto stop, right? Did you do it based off 5 cents? Do you do it based off a percentage? Because it does let you do like percent brackets where you can have like 10%, etc. Because that was the first time I ever did a Thinkorswim trade, and I got excited I could do both. Yeah, no, I don't blame you, man. It is exciting. It's exciting that you can do those simple things. You can set brackets. Like I have percent brackets for trades that I think are going to make it, or I think are going to go up really fast and down really fast, where you'll set the buy at, say, $5, and you can set it at 10%. And a 5% stop loss, and it'll set a limit sell 5% under your price and 10% over. That's my own personal percent bracket that I use. I think it's a pretty good, you know, you want to make 10%, but you're willing to risk 5. If you want to trade like that, I think it's a good idea to set those up, and that's something you can set up in here. Well, you know, yeah, you did it yourself, so yeah, definitely pretty cool. Luckily, it was on paper trading, so that's good. So it didn't really affect too much, really. You know, it sucks because it's a losing trade, but your entry here, to get back to that, at 950, 850 your time was pretty good, actually. Let me go back to it here. Okay, no, wrong one. Oh crap. Yeah, your time here, you got in at, looks like for something here. Bought it. Oh, you're talking about Zkin there, okay. Entry was because it was over previous candle. Yeah. No, that's right. So basically this part right here was the resistance level. Which is why I think it was good of you to buy here at 950. I don't think it was a bad play. I personally, actually, my own personal play, I wanted to get in at 411 or 414 is, I think 411. I keep saying 411. That keeps coming back. And we can see where it hit this part here. And that's actually where I wanted to get in, is when it came back up over this candle here at like 420, somewhere around this area, and ride it up, because I felt like it had enough volume to do it. Even early in that day, it had already, at this point, we're talking, you know, probably 2, 3, 4 million in volume pretty early on, not including pre-market, which is great. Great volume. Not crazy, but it definitely had it. Now, when you got in right here, this is actually like a more of a momentum strategy play, where it breaks this resistance here. You buy here, hoping it's gonna go, you know, probably to here would be the next resistance level. You can see that double top right there, and it did get there actually. Yeah, so okay, that's why it hit and it sold off. Yeah, so we can see it hit that, go across. It hits that double resistance level, and as we can see, it sells off, flushes down below the VWAP. Not to mention, you're also playing a VWAP bounce play. It's, as you can see, it hits, bounces up, boom, breaks the VWAP, breaks that resistance, hits the next resistance, comes down. So playing it there, it's not a bad play because it did break that resistance. So buying in there isn't bad. But something that you should have been keeping in mind buying at that level was the next resistance level. We just draw the line across and you can see the resistance level. Look at that. Like, that's a decently hard resistance there in the pre-market. And as we can see, it touched it barely, sold off almost immediately. You know, you would have had about a minute there to really make the decision whether it was going to break it or not. And when this candle right here, the wick, you see that little tiny wick on it? Oh, that's a little bit too much actually. You can see the tiny wick on this part here, and then it starts to go down, drops below, hits the VWAP, starts to sell off, which is unfortunate. But you did get out pretty quick, which is a great thing. You know, you bought at $9.50 and sold really soon right after. The minus 5 cents, 5-cent loss, not that bad. I mean, just look at the chart. If you had held it for just another few minutes, you, instead of losing from $5.50, you'd pay down, 25 cents instead of 5 cents. So honestly, risk management wise, great. I don't personally use a real stop loss. I just do it in my head. You just know. Yeah, literally the next minute. Yeah, which you made the right call. I mean, it wasn't working out. Hopefully you didn't just sell it because you set the stop loss at 5 cents. Hopefully while you were watching this, you were able to see this play happening in your head, right? So you had set a stop loss at the 5 cents, you were testing it out, but hopefully in your head you saw this. You saw these things happening right here where it's going, it hits this support or this resistance level, doesn't break it, starts to sell off. And if you didn't have that stop loss, I would hope that you would, be emotionally detached enough to be like, okay, hey, my plan didn't work out. It did not break that resistance. I'm out. And if you didn't have a real stop loss set, hopefully you have an imaginary one in your head, to sell it, because as we can see, it went right back down and eventually down more, So I think that was definitely a good, it sucks that you lost on the play, but I think you got in a little bit late. I actually, for my own personal play, I wanted to be in at 411, and my resistance play was going to be at the VWAP and at this here, so I would have probably sold around 440 if it got anywhere near there. Actually, probably these two candles here at 435, I think. So it would have been like a 20-cent scalp play. That's what my strategy was in my head for that play if I hadn't been watching another stock. I didn't realize it came down and actually hit it there, and it did it kind of quick in those 3 minutes, but it is what it is, hindsight, right? But that's the play that I had formulated in my head. I saw this big flat top here right after the open, a flush down. I was hoping for a rebound play, and it definitely did rebound. It rebounded actually more than I thought it would. I didn't think it would break it past there because it consolidated so much in the pre-market, So you playing that was, I think, the right play. I don't see anything wrong with it. It broke the VWAP. It broke the resistance. I mean, yeah. You got in maybe a little bit high. 950 exactly. I'm trying to find your picture that has your actual. It doesn't say the actual price that you entered. It looks like here at maybe 445, and then sold at the wick here at 440. I'm assuming it's kind of what it looks like. So that's not bad at all. The 5 cents there. As we can see, it did hit that resistance level, though. That's where I was saying that it probably would have been better not to quite sell it there and wait for some confirmation. Because as we can see, it hit the resistance. If it broke that resistance, gone down to like 438 even, 439, I would have been instantly out because it broke that resistance and it broke the VWAP. I should have looked back at the PM double top and realized that would be ideal to get in there because I would have only got 3 cents. Yeah, that's like future projection as far as your what you want to gain on a play, right? Because you don't want to. you know, a lot of people today were talking TRVN, you know, and in my head, I couldn't fathom the risk. You know, it was playing like right here at like 124, and in my head, I'm looking back here at these levels, and I'm like, you know, you're talking 4 cents. That's not even worth it. Like 4 cents, don't get me wrong, it's a decent scalp, but you're talking about these plays taking forever to form to make 4 cents. That to me just wasn't worth it. I mean, if it had went from like, you know, 120 all the way up to 140, that's more of a reasonable play for me. But that would be me looking at this chart and being like, hey, you know, it's at this level, and this is the next resistance level 20 cents away. That's worth playing. Otherwise, I don't see it's worth it, you know? I just don't. That's not my play style, I guess. You know, it's just... But in this play, it's a beautiful idea, or a beautiful visual for this, because you could literally see 411, resistance, 443. That's 30 cents. That's a beautiful play. Now, of course, if it breaks that 411, I would be out at, you know, 405. I would have been out, you know, lost 5 cents. You know, that sucks. It's another loss, but the potential gain was the next resistance level, which is at 440. That's a good gap percentage right there. A good... Well, it's penny percentage, whatever, or pennies in actual life. But that right there is a good gap of potential profit, because it's way more than 4 pennies. You know, right here, this play that you're making here, if you had looked across, like just like you typed in, you know, if you had looked across at the resistance level here, 459, 457, and you're buying in at I forget where you bought in at, damn it, 445. Actually, that's not too bad even. I mean, maybe 10 cents if you're... I mean, it's still it's a small scalp just because the resistances are so close together. That's what I'm trying to get at. The resistance here, very close with the resistance here. And they're both big resistances, two double tops right there and right there. This one a true double top, this one a wick double top. Still strong. But once we see right here, it broke it, and it just kind of went up another... If you'd bought right when it broke the resistance at the VWAP level at 442 and scalped it up to... God, if you'd been able to sell up there, it would have been hard. Maybe you could have got 452 and it was solid here, because you would have had the time. So maybe it would have been a 10-cent scalp if you had got the perfect entry in a decent exit. 10 cents, not bad, especially when you're trading 3,000 shares. You know, that's not a bad play in the slightest. And again, risk management, like if it goes against you, you just sell. I mean, even though I lost $500 on this, I lost less than 10 cents a share both times. I think 1.7, 1.9 cents. Both really quick exits. And honestly, I think it just kind of frustrated me because they just didn't work out how I wanted them to. And that's stocks, you know. You're not always going to get these beautiful plays, these beautiful setups, you know. That's just how it is, man. All right, take one more look at this before I got to go. It's already 6 o'clock, and I got to get going here pretty soon. I'll take a look at the other trade that you made down a little bit lower. So at 9, so for me, 10.15, I think. It looks like, yeah, 9.15, maybe 9.14 and 9.15. It looks like you bought. Oh yeah, you sold. Yeah, right at the support level again. Yeah. Yeah, I don't think your entry was bad. Your exit was the only bad thing here, where it literally took off right afterwards. It hit the support level, bounced right up, and that was the only bad part of your play. If it had flushed below that level, that's definitely where getting out would have been. Yeah, absolutely get out. Your entry, not bad at all. So let's take a look at it right here. You got in right here, I think it was. I'm not sure exactly what price, because it doesn't say specifically. But you got in right here. It's sitting, basically consolidating. As you can see, it's consolidating, kind of just going sideways. The volume was not strong on this yet, but it definitely had a play here. So it drops down a little bit more. That's the thing we're taking. Yeah, 418. Okay. So you got, actually, I think you got the very bottom of that candle. So that's a good fill, actually, or a nice price fill, I should say, because you could have got the top at 423, 422. You know, so you save yourself 4 cents there, which is actually a lot of money. You know, $120, 3,000 shares. I trade in 3,000 share increments, so I know every single penny is $30. It's very easy for me to do those maths in my head, because I trade the same share size all the time. That's just how I trade. unless I can't afford it, unless I don't have enough money on a $10 stock. You're talking 30 grand on one trade for 3,000 shares, but a stock like this, you're talking 12 grand. That you're risking. You're really not risking 12 grand, if that makes sense, because you're not gonna let the stock go to zero. You're risking 5 cents of that, so maybe $150. But yeah, when you sold right here at the 5 cents, I know you had the stop loss automatically set, but you probably should have paid attention to the support level more, and basically said, hey, there's a support level here that held earlier, and what happened earlier is you can see the bullish trend going up, and it hit that level. So I'd say that you probably should have held it right here at 413, and then you could have rode it all the way up, actually. I know that's hindsight, but if it broke this level at 413 and broke this previous support level here, and the one that you pointed out all the way back from October, like right here, looks like $4 there, yeah, $4 around, that's where it would have been, hey, get the hell out, because it clearly broke the support, not worth your time, not worth your money. And that's where the 5 cents should have been below, so 413, maybe 5 cents below that, like 408, 406, somewhere around there. And then that's where you probably should have got out, but you almost had to give it time to see if it would hold that support level. And admittedly, there's risk in holding a support level and holding a resistance level. But, I mean, if you don't ever hold it, you're probably not going to make too much money, because you're looking for the breaks of the support and the resistance. If it breaks a resistance level, generally speaking, it has room to go until the next resistance, whether that's 10 cents, 20 cents, 30 cents, $1. In some cases, it really is $1. There was when we were playing last week, I forget what it was, that, God, the resistance levels were like 80 cents apart, and it was just tearing through them. I forget what one. Maybe that was TMSR. Yeah, I think so, because it halted. Yeah, it was TMSR last week. But yeah, I would say definitely try and wait to see whether or not your play is going to pan out. 5 cents, it sucks, but at the same time, it didn't actually break a support level, so it wasn't really worth you getting out yet. Aside from the fact that mentally losing 5 pennies a share sucks. But, I mean, 418, it went all the way up to, 439. Could have made 20 cents a share instead of losing 5. So, again, risk to reward kind of thing. But admittedly, the support was at 436 here. You can see this support level sitting basically right there. So that would have been your tolerance, right? So if it had got up to 436 and it flushed down, you just sold it like 434, and that wouldn't have been bad. That would have been 15 cents a share, 16 cents a share, just to wait to see if it would hold or not. And I know that mentally that's really hard to do sometimes, absolutely crushing, but sometimes you gotta let it play, and it would have panned out. All right, I gotta get going here. 6:10 my time, so I gotta get going. I'm gonna try to do these more often with some stocks. Even if nobody watches, I'll just post them on my channel. Analysis on some of these stocks that I play. Just because A, it helps me, B, it helps other people, and it helps you see other things that you just never see about, like, on your own. It's so hard to know these things. Like, how do you know that? It just takes time and hours and hours and hours of beating on charts. And a lot of YouTube videos just don't do a great job of portraying some simple stuff that's there. And it's nice to go over your own trades too, because you can see, like me going over the trade with you, you're seeing exactly like, hey, maybe I should have done this, maybe I should have done that. Yeah. But all right, dude, I'm gonna stop the stream here. I gotta get going. I'll add this to my thing if you want to go over and re-listen to some parts of it, or maybe look at I would recommend maybe going on the charts yourself if you get a chance at home and just taking a look. Honestly, just going over kind of some of the things I pointed out and saying, hey, simple stuff just to look at, future reference tomorrow maybe, give it a look. But yeah, all right, man, I gotta get going. So I'm sure I'll talk to you. All right, see you.